Well, exactly. So real estate is a phenomenal hedge against, inflation. Whether you're a buy and hold investor for rents go up with inflation. I just increased my properties recently 5 to 7% across the board, just for example. And of course, the asset appreciation, right? So, but back to your earlier point, again, I'm a developer. I'm raising debt on a project of $65 million, and it's amazing the line of people ready to provide me, 90% of that overall need. I mean, without a blink of an eye. So you're right. The lineup with dry powder towards debt is substantial. Right.
It is. It really is. And ultimately, when we talked about the Irish social housing, they had $300 million in debt finance by a large German reinsurer at 2.5 points. I mean, that should tell you that money, they're very interested in that debt. So that's mainly risk aversion. But I think that gives us an opportunity on the equity side to really deliver some outstanding returns for our investors. Last thing I'll just mention before we kind of jump into real estate, because I think people have an interest in, we're in Texas, we have an interest in energy. The amount of reliable energy out there that are turning into alternative energy. So you think about the solar and wind out there, and folks are investing heavily there. They're investing in, the electric vehicle side of things. Ultimately, the biggest thing I heard from this, and this will actually trickle down to the real estate market as far as production goes, the energy spend, it's probably too little, too late. Solar, wind, they're just not reliable. It doesn't help with costs. And, ultimately, kind of the themes were to spend money on adaptation. Otherwise, we're going to have these massive migrations through the world. So it was really interesting to hear kind of the shortages of reliable energy. We dealt with it in the freeze here in Texas in February. But right now on a global production, we're consuming 100 million barrels of oil a day. So for anybody that thinks, oil is dead, it is not. I actually think that price of energy is going to climb.
Yeah, let me just give one tangent, and I won't tell you where it's at, but it's in the heartland of the oil capital of the United States. My land guy has connections to ExxonMobil, and today I'll be submitting a final offer to pick up 8 wells. They're water wells. They're not oil wells, but water is a big part of oil. And we're looking at the future demand of oil, and yes, it'll come down. It's probably peaked, but to your point, it's not going anywhere for 7 to 10 years. So,
and that should help, I think, continue, what makes Texas great. I mean, we've got a great, economy, obviously supported naturally by oil and gas. Now it's becoming tech, and then all the other, subsectors that come from people living there. So I definitely think Texas is still a tremendous market. I always bring up that energy fact because, if people think that the alternative energy is really going to overtake oil and gas, it's not the case. It's just not the case. I believe the number was that we've got 1.25 trillion combustible engines right now versus 15 million electric vehicles right now. Yeah, number over the next decade. What's that?
Yeah, no. So yeah, I was just gonna say the EV space will substantially grow, but that's not where all the demand is on oil. And again, it will slowly shift into a hybrid model, but we're still a decade out from substantial changes where it impacts profitability of oil people. So
it's not going to make a dent. And here's kind of the themes from a real estate perspective, because one of the questions that I ask with most folks is, what is the hottest sector in real estate? Tell me where smart money is going. And it was a very interesting response, and I really appreciate it because we actually have record amounts of dry powder in the real estate space, but it's not sector specific. It was really a rifle shot approach. And I really think this comes, into play with who what does your network look like? Where's that deal flow coming from? Those sponsors, single family rentals was a huge topic. Self-storage, retail was becoming interesting. You look at e-commerce, which obviously doubled over the course of the pandemic. It's actually becoming more interesting. BV Capital was on here a few weeks ago talking about their Archway triple net lease really kind of retail Amazon proof type opportunities there. Senior housing, that they were allocating about 5 to 6% of some of their portfolios to senior housing. That 80 plus market was something of interest. And on the multifamily side, the supply is not meeting the demand yet. I mean, we still have ways to go, which really felt on my part. I've seen a lot of multifam development deals, and the numbers that they're offering investors really weren't that appealing to me. Yeah. Perhaps they get more appealing as those cap rates compress, which we could see.
Were those syndications of existing structures, or was that ground up development?
Yeah, a lot of those were value add versus development. I think a lot of folks weren't interested in development.